Hello, traders. Welcome to another section of our YouTube class. And you say the market is closed right now, and everywhere is calm. So I think it's best I do this right away. You should do well to use the subscribe button, hit the like button because more and more videos like this will be popping up on the YouTube channel. Unless I forget, hope you've gone through several videos I've posted right on the channel and the weekly analysis or the weekly breakdown we did. Hope you've gone through them and see how market played out. Though it wasn't an easy one, a little bit turbulent, but those with the skill know how to come out good and profitable all along. So today I'll be looking out for what they call liquidity. Liquidity. You might have heard this. You might have heard these several definitions from different books and from different places. But what does liquidity simply means? Um, you know, the market is not meant to give you money. The market is meant to take money away from you. That is why for some traders to win, other traders have to lose. For you to buy, there must be someone out there willing to sell. And that is how the cycle goes. So what is liquidity? Now, liquidity, I'm gonna type this down. I'm gonna type this down. Liquidity is an area, or liquidity, which can also be called liquidity pool, is an area whereby traders places their stop losses. That's a very simple definition of liquidity. When I say there's liquidity, that means there's an area with a lot of money. There's an area with a lot of money. Now, how do you know these areas that have loads of money? How do you know? Well, these are the basic areas we all know as support and resistant areas. Support and resistant areas. As a trader or as a beginner, you were taught you buy at support and you sell at resistance. And since you've been taught that way, if you buy at support, your stop loss should be below the structure. And if you sell at resistance, your stop loss should be above the structure. Now, I know most of us have been in this scenario whereby we either bought or sell and the market went against us, took our stops, then went our way. If you've been in that situation, I know definitely most of us have been in that situation. So today, I'll be looking at some currency pairs and showing you how liquidity played out and how some traders were actually hit, how some stop losses were taken, money was cleared, and those traders, because they lack the experience or they really don't know what actually happened, that their money went that way. Now, right here, this is CADJPY, and you've been taught to sell at resistance, buy at support, sell the double bottom, sorry, sell the double top, buy the double bottom. That's a mistake. So, what happens? So, we're going to mark out areas that most retail traders are more likely to trade from and see how price reacted to this area. I'm going to take this out. Okay, let's just play with it. Now, from where price currently is, we are going to mark out areas. We're going to mark out areas. This is one. This is one area, a double bottom. And we all know when price was approaching this place, so many traders without confirmation bought from here, and we could see how price blasted through this place. And when price blasted through that place, there's something below every structure point. There is money. There is pool of money, which is called liquidity pool. So right here, price blasted through this point, took their stops, and went up. Most of us have been in this scenario where price dipped in our stop and went our direction. As a retail trader or as a beginner, you're told, come on, risk 30 pips, risk 35 pips at most. At most 35 pips. Most of us don't even want to risk up to that. So you've been told to risk 35 pips, you've been told to risk 25, you've been told to risk 20, 15, as the case may be. But right here, what price did here, price blasted 77 pips against you, taking your stops. There's nothing you could do about this. Right here also is another area where retail traders or beginner traders or traders without experience were looking to buy the double top because they were waiting for price to come back to this area to test it for them to buy. Actually, price came back right here and we saw this bullish momentum. So many traders were already in this trade and we could see, boom, price dropped. How many pips? 60 pips, taking every stop you might have kept there. Liquidity was swept. In another scenario, we could see right here, we could see right there how price swept through and dropped. You can keep searching out and searching out and searching out and searching out and see how price take out stops and go the other way. Now, have you asked yourself, why does this happen? Why does this happen? Why does it take my stop and actually go my direction? There's actually a reason. But most times we've actually not taken this into consideration to look for the reason. So this video is just to introduce you to liquidity and how you can escape it. Now, how can you escape liquidity? Number one, whenever you see price reaching an area of support or resistance, don't buy or sell immediately. Right here, you could see how price came here, dropped, took out this area a little and dropped. And price keeps doing this over and over and over again, taking your stops, faking you out. Another word for the move caused by liquidity grab is called fake out. It is called fake out. So right here on CADJPY, could see areas where price took out stop losses. If we should break down this chart to a smaller time frame, you're going to continue to see how price took out stop losses and still went the direction. How price took out stop losses and still went the direction. Now, why does price actually take out stop losses before going your direction? Because you've been taught something that the institution know about. You've been taught buy the double bottom, sell the double top, buy at support, sell at resistance. And if you know that, the institution know that. Most of these informations are live on Google. That's why it is very important for you to actually, when you're learning how to trade, look for someone with the right mindset, someone with the right education to actually put you through. So in this liquidity video, I'm just going to be identifying areas to bring your mind to why your trade or why you get stopped out before price eventually move in your direction. Maybe you are willing to sell from here. Wow, this area is one, two. Okay, when market gets here, it's gonna drop. Even if it's gonna drop for 50 pips or so, this is 150 pips. That's a lot of move. You can see how price dipped in, faked you out. You thought price was buying, and you thought structure had broken, and price faked you out, dropped. Most of you would have been looking for a retest to go long, and price dropped. And now you begin to wonder: is it that these guys are seeing me? Is it that these guys know where my stop losses are placed? Is it that these guys actually, the market is not meant to give you money, it is meant to take from you. That is why record has it that 95% of forex traders are not profitable. So just 5% are profitable. What does this 5% know that you don't know? That is a question for another day. So for today, I'm just going to be showing you why your stop loss gets hit before price goes in your direction. And the simple reason is because price usually go to your stop losses to collect liquidity. Whenever you place your stop loss, it is being known to the big banks. It is being known that okay, this is where majority of stop losses have been placed. So they use money to move the market against you, take your money, then allow the market to flow in the normal direction. So I'll be doing a more comprehensive video on liquidity where I'll be breaking down series of charts. We'll be moving from one currency pair to the other, looking at how liquidity happened, how stop losses were taken before the market moved or before price moved the normal direction it did. Now, to know more or to learn quicker, you should make use of the website tradehouse.com. And currently we are undergoing upgrade on the site, so you might not have access. But when the upgrade is done, and you're going to get full access to the website where we break down liquidity and how we trade the smart money concept of trading, where we look out for how the institution trade. Though trading is 80% fundamentals and 20% technicals, but we tend to approach the market morely from a technical standpoint after we've got the fundamentals. Though we don't teach fundamentals, we teach you pure technicals, but with a difference. Um, do well to watch this video. Click on the subscribe button, click on the like button. You can go over other videos, watch it, and get one or two from them and use it to boost your trading. See you in my next video on liquidity, where I'll be breaking several currency pairs and several charts down for you to see how liquidity is being used against you. Thank you. See you in the next video.